Today is December the 6th, and I'm going to spend the day just walking you through different time frame charts on the Ichimoku to give you an idea about how I use them. I'm not sure today is the best day to be doing this because we had a big jump in the Russell, but let's give it a shot and let's see what we see. So I'm starting off with the daily chart just to give you an overview of where we are. There's the gap that we saw in the Russell this morning. Now I'm going to go back and I'm going to look at different time frames. And let's start with the 1 hour. Very interesting. What does the 1 hour tell us? That today's spike in the opening hour came where? Into the cloud, but finished the hour right at the top of the cloud. So on a 1 hour basis, we're looking at the Ichimoku cloud as being pretty decent resistance. This thickness here indicates that there's a lot of resistance ahead, but as time moves on, we're going to see the resistance decrease. And there's always that possibility that price could sneak higher later on in the afternoon where the cloud is its thinnest. So we're going to watch the 60-minute chart very closely. What do we see going forward? We see that the cloud spans A and B have reversed. See where the A span, the top span, is now the bottom of the cloud, and the B span is actually the top of the cloud. So this is the spans reversing, and in order to highlight that better, the software changes the color. So the color red doesn't necessarily mean down, it just means reversal. So we're going to be watching the hourly chart for a possible breakthrough in the afternoon. We may just move along here, we may move down, but one thing's for sure, if we don't break through in this thin weakness, we can count on this much resistance at the end of the day as being an opportunity for a pullback. Let's look at other time frames and see how interesting they might be. Let's look at the 30-minute. Look at the 30-minute. The 30-minute started reversing yesterday. Let me just click on View Cursor Data, and you can see in the bottom right-hand corner that the cloud reversed yesterday at about 2:30 in the afternoon. This spike this morning was purely driven by the jobs number, but look where it topped. Perfectly at the top of the cloud. And rejection. Let's go to another time frame. Let's see if they're as informative. Let's go to the 15-minute time frame, and what we see is the obvious breakout and a pullback. So this would say on a 15-minute basis you could have bought the Russell, but the confirming candle didn't give us an entry. In fact, the confirming candle was down, so it told us that we could short the Russell after this big candle. And then drawing the fibs on it, we see where the first level of support would be at 61.8%. The 5-minute, again, if you were going to enter for a quick day trade, you wouldn't do it on the 15-minute candle. You wouldn't even do it on the 5-minute, but we do see, of course, confirming red candle for a short, followed by another, and now we're into a choppiness. So a quick trade could have been made here. Let's go to the 1 minute, and the 1 minute chart is showing us that we failed the cloud. So if you're a real scalper, you're going to use the 1 minute, and you would have taken your trade right here, get my pen here. You would have taken the trade right here, gotten your confirming candle, followed by this little doji, followed by a couple more. This was cloud support. Now we failed the cloud, we failed the 1550 EMA, and we could still stay in this short trade if you're a 1-minute scalper. So each time frame is for different traders. If you're trading on a quick scalp, you're going to keep watching the 1 minute. And the 1 minute is telling you that up ahead, this is 26 minutes ahead of that candle. Tells you that we've got the beginnings of an inverse relationship happening. And so you would keep your eye on this to tell you if the Ichimoku is projecting future down or future up. I'm going to come back to this chart later on, and we'll see what more we've learned. Okay, now we're 12 minutes later than the last post, which was right up here. And we see price coming down in the 1 minute cloud and moving up. And there's no evidence with the cloud or the Ichimoku to tell us why we've had this reversal. But having drawn the fib on this opening candle and gap, we can see that we had had a pullback to 61.8%. The other time frames don't tell us anything. This one doesn't tell us anything. The fib is what tells us that we had this, why we had this bounce. We're looking future, and we're still seeing what we saw the last time we had the video was this little signal here that we were reversing, and now it's broadening. Okay, here we are about 10 minutes later. This is where we left off, and we see price coming down. We see this flat wall of the cloud. I mean, price had nowhere else to go but through the cloud. So you've got this vacuum in here. Price, in this case, can move up, can move down. If it moves down, watch the Chiku span, okay? The Chiku span, Ichimoku says the Chiku span will be the next indicator of support on the downside. This is where price should get a bounce. That would correspond to price being somewhere in this region. If price goes up, we expect resistance to be here. So if you're short, you would stay short down to 1127. If you had indicators that say you should go long, you could stay long up until 1129 something, 65. Let's take a look at the 5-minute cloud very quickly. Clear this, go back to the pointer, 5-minute cloud. 5-minute cloud tells us nothing about upside, but it tells us that potential downside support is going to be at the cloud here, which is close to where we saw the Chiku on the 1 minute. That's if we move in this direction. If we move more rapidly, then we're going to come to this very thin part of the cloud where there's absolutely no support, and the cloud could never act as a bounce for us in the positive direction. So we would see this kind of motion coming down to join the 200 EMA. Now I'm going to pause it and we'll come back.